Hi, everybody. This is Ryan from firmTRAK Solutions, and I'm joined again by my partner, Carin Weiss-Krolikowski. And today we wanted to discuss the Tax Cuts and Jobs Act, essentially eliminating entertainment expense for your business. And it's kind of a big deal, even though it may not have a big financial impact for your individual company, but overall, that change in philosophy from the act that was passed is kind of a little bit unexpected, I would say. And then there's going to be a lot of thinking and planning that has to take place because of that. And we just wanted to talk about it a little bit today because even though it seems like it would be more well known, I don't think it is. And it essentially eliminates all of those business trips that you buy on the company's dime for golf events, sporting events. We're in the middle of FIFA here in the US, so all that's now basically eliminated. So what do you think now, looking back over the years of all the miscellaneous things that people have put on the books as an entertainment expense? How does that sort of fall on your ears?
Well, I think that it's important to advise your clients that if they just want to take the other partner and go golfing, you can do that, but you can't do it on the company's dime any longer and get 50% credit for it against your books. The other thing is that if you're taking clients out to the ball game, not to put a pun on this, but it's a real game changer because you've got to realize you can't deduct that any longer. Now, of course, if entertainment is your business, then that falls under a different category. But let's just say you're a law firm and you want to take one of your clients out, that's great, but be very careful because you can't do it on the company's dime any longer.
And essentially what that means is you're spending money and you're getting no tax benefit for it. So, I mean, it essentially is going to operate like an owner's draw or distribution at that point as opposed to a legitimate company expense. And then just to share some of the primary sources we were looking at for this, I'm looking at IRS Gov and looking at Notice 2018-76. I think 2018 is for the year, which is the year it took effect. In this notice, they give you a couple examples as guidance, and so I just want to discuss those quickly. And then I also want to mention that there are 9 exceptions to the new rule that are still deductible, so we'll chat about those briefly as well. So in this notice 2018-76, they give a few examples, and they give a baseball game where you buy tickets, and then once you're in the stadium you buy food separately. And then they give an example of a basketball game that is invoiced in 2 ways. The first way is that it's an all-inclusive invoice with no itemizations. And the third way is the basketball game where you buy tickets, but they have a line item for food and drink. In all 3 cases, no exceptions, the tickets for the sporting event are no longer deductible. Those are entertainment items for the sole purpose of amusing the purchaser. They use the word amusement quite a bit in their explanation in their notice here. So the tickets are out the window, no longer deductible. However, the food is still 50% deductible if it's itemized in both the baseball game and the basketball game, as long as there's a separate charge, and you still have to discuss a legitimate business purpose just before, just after going to the event. So you still will get the 50% meals if you invite a client contact to a game, but you will no longer be able to deduct the sport tickets. Carin, what do you think of that?
Yes, we have seen that quite a bit. The exception would be not so much for baseball games or golf outings, but if you're throwing a holiday party for your company, that is still deductible. So I do want to throw that in there. So if the entire firm or company is invited and it's for the purpose of strictly entertaining your staff, then that is still deductible. But yes, taking clients or employees or your partner to a golf outing or a ball game or any other kind of sporting event is no longer deductible.
Yep, and then there are, if you're trying to research this on your own, there are 9 exceptions to the new updated law, and they are, I'm just going to read through the headlines here. and I'll provide this source in the details, but expenses treated as compensation, food or beverage expenses provided under reimbursement arrangements. So that's going to be like a fringe benefit that's deductible. And then as Carin mentioned, like a Christmas party you put on primarily for the benefit of your employees on your premises, that would fall under the third point, which is recreational expense for employees. So holiday parties and picnics are the main categories there. Those are still 100% deductible. Items available to the public, that's the fourth one. Now, the fifth one, goods or services sold to customers, that's kind of self-explanatory. And there are a few more, but that's gonna be the list for now that we're gonna discuss today. So as always, let us know if you have any questions. Was this a surprise to you? Did you realize that the IRS got rid of entertainment deductions? That was a pretty good way to get extra 50% tax benefit on the total expense as a line item on your books before, but it's completely gone now under the new law that took effect 8 years ago at this point in 2018. So if it's news to you, we can discuss that with you. If you have any questions, come see us, leave us a comment, and we'll talk to you next time.